You're listening to Prosper in the Kingdom, the podcast where faith meets practical strategies to help you become healthy, wealthy, and wise. Join hosts John Cleaver and Wendy Lee as they share insights to equip you in your journey toward abundance, spiritually, financially, and beyond. Just a reminder, every situation is unique. The content of this podcast is for educational purposes only and should not be taken as specific financial or medical advice.
Hey everybody, welcome back to another amazing Prosper in the Kingdom podcast / YouTube / getting the news out there. And I'm your host, John C., with the ever awesome Wendy Lee. Wendy, how you doing today?
Doing good. Happy to be here. Happy
Fantastic.
Wednesday.
Yeah, I know, right? It's crazy. And today is my youngest birthday, so I want to wish Ben a happy birthday too. I don't know that he's actually a podcast listener, but at least he'll give a little shout out there. So
Happy birthday.
That's right. Happy birthday. So today, even though it is Ben's birthday, we're not going to talk about that. We're actually going to talk about something I've been dealing with kind of front line here in the last week. My mother, who's aging, has been in the hospital, and I want to thank everybody for the prayers and warm sentiments that they've been emailing me and through Facebook and stuff. She's doing well, and I think she's actually leaving today, as a matter of fact, going to rehab for a week. But we're going to talk about long-term care. This is something that's been kind of a quiet passion of mine, and I wanted to get a little louder about it, talking about long-term care strategies. And so today's show is going to be about traditional long-term care insurance and, asking the question, is it broken? And so we're talking about a lot of the truth behind the curtain, so to speak, that most advisors won't say or send with you. So it's one of the most misunderstood areas in all of financial planning. And today we're going to dive into that. And I know this is going to ruffle some feathers. It's not intended to. It's designed to bring truth to the light. So you, as the consumer, or if you're thinking about long-term care insurance, or, maybe for you or your parents or whatever, you can make an educated decision, because that's what it's all about, right? And it's not 100% right. It's not 100% wrong. It's just you need to know all the facts and what other avenues, I guess, are available to you. So before the LTC, and there's a lot of people out there that focus on long-term care, LTC, start typing anger comments and stuff like that. I want to be very clear on this. We're not saying long-term care planning is unnecessary. Quite the contrary, right? Ignoring long-term care planning can actually destroy an otherwise solid retirement plan. Or wealth strategy legacy plan. But what we are saying is the traditional use it or lose it LTC model that's been around forever, and that's pretty much the go-to out there, is outdated, especially for most people in middle class. All right. So today we're going to be breaking down why it's become harder to justify that traditional long-term care strategy, right? Why many families resist buying it, and what a hybrid solution can do for you, and why it's growing in popularity, right? And how to think through the issue wisely, again, to make that educated decision for you and your family.
Yeah. I want to chime in real quick, John, because before working with our company, I didn't even know what long-term care was. It wasn't even a thought in my head. And I think people that we have a lot of people that listen to our show or watch our YouTube or Facebook Live that do not have a financial planner, and may have never even, unless they have a parent that needs it, don't know even what it is. So I think, one thing I've seen pop up as we do financial planning for people is we find a lot of people that are having to now care for their parents.
Yes.
And are realizing the importance of having something set up so it doesn't create that financial burden to take away, all the parents' money, or we see it also affect their children, adult children, who have to help supplement and care for an elderly parent. So I think as people age, if they haven't had a financial planner, all of a sudden long-term care becomes very relevant, but a lot of times it's way after the fact, and planning early is important.
No, and that's, again, it's like anything, like building wealth, building retirement or whatever. The more time you have to kind of plan it out, the better plan you're going to have, and the lower cost it's going to be, and those kind of things. So, I want to stress that long-term care planning matters, right? And this is, you just said it too. It's not a minor issue out there. You look at some of the statistics, and I just posted an article yesterday on LinkedIn, kind of diving in a little deeper on this. But a prolonged care event, and it doesn't have to necessarily be for elderly people, which that's traditionally what it is, but it can be for you in a motorcycle wreck. I had a buddy of mine getting a motorcycle wreck, and he was, in rehab basically for 6 months. And that stuff's not cheap, right? And so a prolonged care event, number one, it can drain your accounts, right? It's not cheap. It's, you've got to come up with some kind of solution for it. So that's the first place they go. And a lot of people say, okay, well, we'll look to the state for some kind of long-term care solution, which is fine, but they're going to take all of the assets at that point. It's going to force liquidation of investments. If you've got stocks, bonds, munis, whatever, you're going to have to, carve those off, and it's going to impact, like I said, your retirement planning, your legacy plan, and it's going to derail all of that. And then it also, like you said, places that major burden on spouses and children. If there's not a solution in place, well, you've got to possibly take that, person in the home. So now you're trying to work a full-time job, live your life, and now you've also got to care for an elderly parent. And so it's not hypothetical. It happens literally every day, and this kind of came to the forefront as I'm dealing with my mother as she's, getting aged. And, you look at how long you spend building your wealth, and it could be decades, right? Only to watch that nursing home or assisted living event literally eat through your portfolio in a matter of years, right? And I've seen it happen. So I want to be very crystal clear on this. And Wendy and I are saying doing nothing is not a strategy. Just hoping it all works out and I'll figure it out later is not a strategy. You need to plan. And the question is simply, what kind of plan makes the most sense for you? And that's what we're talking about today.
Yep.
So, kind of diving into it, what do I have against long-term care, the traditional long-term care standalone strategy, right? And this has been the go-to for decades. You talk to most traditional advisors, and that's their go-to, right? And you've got to look at it for what it really is. Okay. And here are some of the core issues that, I have with it, right? Number one, it's a pure expense. Okay. You pay the premiums, maybe for decades, right? And what if you never need long-term care, right?
Yeah.
What happens? You put all that money in. It's one of those things. Well, I want it to have it, but if I hope I never need it, because let's be honest, nobody wants to go into an older, person's home or, a senior living home or assisted living. Thank you. But half of us do statistically. And we all think we're going to be in that other half, right? So next time you're in church, look around the room. Half the people in there are going to be going into some kind of assisted living, and more than likely it's going to be you as well. Okay. But in a traditional long-term care scenario, you're paying for this kind of like car insurance, right? Every month, every single month. But if you don't use it, what happens? You get nothing, nada, zilcho, right? No death benefit, no cash value, no residual value, no refund. It's just gone. And don't get me wrong, for those that are using it, they're like, oh man, I'm so glad I got this.
Yeah.
But for a lot of families, it's a hard pill to swallow, right? And according to federal data, roughly 1/3 of Americans may never need long-term care support, right? Some people, the 50-50 I was talking about, some people may need it shorter term, but literally 1/3 never need it. And so that's a meaningful percentage in the fact that policyholders may never use what they paid for. And so you look at that and it's like, man, I'm going to spend all this money and there's a 50% chance that I may not even use it, use it. So add on top of that, you've got traditional long-term care policies. They have a long history of premium increases, right? So not only may you never use it, but the carrier is going to ask for more money later. It's not like a term insurance where, you set it up and then it stays that premium for a period of years. And that combination, what happens, it creates resistance, right? And frankly, I completely understand why. That's why I'm not a big fan of it. It's like, wow, I'm going to spend, and it's not a cheap amount, right? Long-term care insurance is not inexpensive. And if you don't use it, it's like, that's just gone.
Yeah. 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 And we were actually talking to some friends or clients that are also friends the other day. And they've got in their head long-term care insurance. Like a lot of people don't know that there's options beyond that. And it's kind of like term, right? We term for 10, 20, 30 years. And then if you don't use it, it's gone. But I guess the big difference is term insurance is a lot more affordable. You can get a big policy early on for cheap, whereas long-term care is a lot more expensive.
Well, yeah, and that's why, quite frankly, a lot of families just simply avoid it, right? We'll figure it out. We'll figure it out later or whatever, and then all of a sudden it's like, oh my gosh. And this is the part that, the traditional industry ignores, right? Most families don't reject long-term care planning because they think they'll never need it. It's, that's part of it, but they reject it because they hate the structure of the traditional product. The thought in their mind is, why would I pay thousands per year? And you heard that correct. Why would I pay thousands per year into something I may never use? And that's the resistance that causes many people to do what? No planning. They do nothing. They have no protection, no strategy whatsoever. And that's where the huge problem comes up when your parents get older and all of a sudden the health issues, or you get older, as you will, right? We all get older every time the years pass. And that becomes a huge problem because now you put that burden on your children. And because this imperfect strategy, the perfect strategy, the client never buys, right? And so that's the problem. So what's the solution to all this? All right. So there's something out there, and I like to call it a hybrid LTC rider strategy. Okay. And this is growing in popularity. Like I said, I'm a big firm believer in long-term care. So I always bring it up in our discussion. But there is actually a way where you can, if it's properly structured, you can create a permanent life insurance strategy with a long-term care rider attached to it. Okay. And again, it's got to be structured properly. And the way it works, and I know some of people, oh, he said permanent insurance, no, the radio guru said, no, hear me out on this. Okay. Because it's a very cost-effective strategy. And I'm going to give you the reasons why I love it. Okay. Number one, if you need care, the policy provides access to the death benefit during your lifetime. So basically what happens, instead of you buying a long-term care standalone policy, put all this money into it, if I don't use it, I just lose all that money. I create a properly structured permanent life strategy, right? Where I have the death benefit can also be used as my long-term care benefit. Okay. The thing I love about this, if you never need care, guess what? That death benefit passes on to your beneficiaries.
Yeah.
Right.
Yeah. Yeah. So they're taken care of instead of the worry of them having to take care of you.
Exactly. Right. So if I need it, it's there. I don't have to worry about it. Right. And you can set it up. I like to set it up for 3 or 4% of the death benefit on a month, and that's a monthly amount. It operates a lot easier than traditional long-term care insurance as well. But again, that death benefit passes to your beneficiary if you don't use it. So you don't lose all that money. Okay. Right. And depending on the design, the policy may actually build cash value along the way. Now, if we do it for you, Prosper in the Kingdom, we make sure it's designed to give you cash value. Right. And so what that means to you as the client is one pool of dollars can really address 3 separate issues. So you're spending $1 one time and it covers 3 issues rather than you spend $1 one time, you get the traditional long-term care and there's a 50-50 chance that you're just throwing that money out the window. So by using that properly designed hybrid approach, you get the long-term care risk mitigated, right? There's number one. You have a legacy piece in place, meaning if you don't use it, guess what? All that money goes to your beneficiaries. And then also because of that, again, properly structured with that cash value accumulation, you get a supplemental retirement strategy as well that you can tap into. So it's kind of an extra bonus amount on your retirement strategy overall. So in my opinion, this is a much better solution than buying a traditional long-term care and then pay and hope you use it, right? Which is crazy to think, oh, I hope I go into long-term, a long-term care situation. But it's like, I don't want to waste that money, right? Is it perfect? No, right? Standalone LTC often provides, more pure care leverage per premium than dollars. So that's where, a lot of high net worth clients, it may be right for them. They've got extra disposable income. It's like, I'll throw a few $1,000s into this thing and just as a protection mechanism, which is great. And I'll admit that all day long, right? However, it's not just about the leverage. Okay. This is what planning is all about, why you want to have a plan. It's about utility. It's about behavior, and it's about implementing strategies clients actually feel good about. This is why high net worth, I see it, right? I see where that value is, but it's not like you're getting a cheaper version of it with an LTC rider. You're just getting a more cost-effective version of it.
Right.
Okay. And that's where I feel, middle-class families feel dramatically better about repositioning money to something that actually creates values either way. Whether I use it or not, we're still getting the value out of it.
Mm-hmm. Yeah. And I don't have a ton to add because I don't know a ton about this subject. My only real experience is just hearing how much financial damage can be done when you don't have something in place. And I was on a call yesterday learning about women in retirement and, specifically like the risks with women as they age. We all want to retire at 60 years old, and women are living, 80, 90 years old.
Mm-hmm.
And so that's 30 years in retirement. And typically the men die statistically, men die sooner. And so the woman's taking, what?
We do stupid stuff, right?
Yeah. Well, and then the women take care of their men, right? But then when the man passes away and the woman lives another, 10, 15 years, sometimes like, both my grandmothers, then as they age, then it's the kids having to take care of them if there's not something in place. And, and when they're, from my understanding, when you use, like you mentioned this briefly, but when you leverage the state and what they provide, they seize all the assets. They take all that in, and basically you're left with nothing, right?
Well, you're not left with, you're not left with nothing. They go in and do an assessment, and they've got certain formulas, like especially if you're in a married situation, they're not going to take the primary residence, right? Because you still got somebody living there. Right. You're allowed a car. But they're going to take a huge chunk of the assets to cover that cost, because they're looking at it as, okay, why would we cover it with tax dollars when you've got all these assets you're sitting on and you just don't want to pay for it? So, it's not as though they wipe everything out. Now, if you're standalone and you're the sole survivor, that's a kind of a different conversation, which, impacts your legacy play for your children, grandchildren, kind of things like that. And so, it's not as though traditional long-term care, is dead. Like I said, there are some scenarios where it still makes sense, but I want to be fair about that. But in reality, for most people, you're going to get a bigger bang for your buck when you use an LTC rider, right? Mm-hmm. But when would a traditional, if you're considering LTC or you have a long-term care contract, I don't want you to be upset at the person that wrote that for you. Some examples of why you might want to have that, or where it would work. High net worth families, again, they got the extra disposable income and they're focused purely on asset protection, right? Clients seeking that maximum care leverage, big amounts. Now, big coverage amounts mean what? Big premium amounts too, right? Mm-hmm. And people that, quite frankly, are comfortable with the use it or lose it, economics. Me personally, no way. That's not me. If I can figure out a way to mitigate and play the angles, right? I want to make sure that I'm, protecting myself while still leveraging that or mitigating that risk of loss, right? Which, it's huge in traditional long-term care. But, there are cases with specialized standalone coverage that fits better than hybrid options. That may be somebody with special needs, children or something like that. So there are cases where that traditional LTC still makes sense. But like you said, in a traditional household, the men are typically a little older, a little crazier. And so they're going to pass away first. It's just statistically is what I'm talking about here. And so the husband's typically, taken care of to some degree by the spouse. Well, who's going to take care of mom? Right. That's the bottom line. And so it's not as though it's black and white. And I'm not saying that traditional long-term care is always bad. What I am saying is it should not be the automatic default recommendation anymore, especially for middle America, right? Because you can get so much bigger bang for your buck in the hybrid strategy, as well as you're going to get that money passed on to your legacy. And, I would much rather spend some money, and I'd be okay with it knowing that my kids and grandkids are going to get it if I don't use it, but I've got that LTC rider in there. So if I do have a long-term care situation, I don't have to sweat it, right? Yeah. And so, again, that's something to consider. But, just kind of closing on this, because I know this got, a little bit technical on it, but just ask yourself this question, right? Which policy gives me the most LTC leverage? That's not really what you want to be asking yourself. The better question: which strategy protects my family while still creating value if I never need care? Okay. Yeah. And that's really the hardcore question to ask yourself. And long-term care planning is wise. It's going to happen. We don't get healthier as we get older. You go through maybe a little roller coaster there. But aging is not good for the body. And it's one of those things that happen, right? Blindly defaulting to an outdated model, I think, is a mistake. If you want a second opinion on your long-term care strategy, or maybe like Wendy was talking about, you haven't even thought about that. And maybe you're dealing with a parent now, want to protect your kids from what you're going through. Let us know, right? Or if you've got a long-term care policy you wanted to review, right, into a broader financial picture, because that's really what a holistic approach is about. So often traditional advising is in silos. Well, we're going to talk about retirement. So we're going to look at market-driven AUS, right? Assets under management. Oh, you need insurance. Okay, then we're going to look over here, and we're going to look at life insurance. Oh, you need long-term care. Okay, we're going to look over here at long-term care. It's all silos. But the reality is it all blends as part of your life, right? And that's what we're trying to do. That's what we're trying to bring. This is not complicated stuff. It can be if you get buried in the weeds and, you're talking to an advisor that's talking way over your head and not educating you. They're just telling you this is what you need. And that's why Prospering the Kingdom exists, folks. We're trying to help educate people. If you need help, let us know. Simply go to safemoneyroadmap.com and, make a point to sit down with us. No obligation. If you need help, great. If not, at least you've got a plan now, and we can bring solutions. We work at tons of different carriers and all different strategies from a financial wealth building, asset protection, legacy planning, all of the above. So we'll help you evaluate your stuff and see which makes sense for you and your family.
And what I love about what we do, and this is why, I started working with you in the first place, is because, there's a lot of people have different opinions out there because they sell a certain thing, right? Yeah. Like if somebody sells long-term care and it's high premiums, they get good commission, right? Versus someone who's doing financial planning and all they do is assets under management. They get a percentage of your money, no matter if you're making money or losing money. There's these different pockets, people in life insurance. Sometimes they only have a life insurance license and not a health insurance license. So they can't even add an LTC rider. So it's important to get to get wise counsel, right? What you don't know can cost you a lot of money. And that's why I love what we do, because we're not driven by commissions. We're not driven by, we can only sell this product, so that's what we're going to do. We truly we care about, God's children, and we want to help people put the best plan in place, even if that means it's not something we offer. But that's why I love, this long-term care rider. We have this conversation all the time, and with people that don't even think about it. And then once they see it, oh, wait, I can add this into what I'm already building for literally no more money. And people are like blown away by it. So anyway, so you guys get your Safe Money Roadmap. Yeah.
And just to close out, if this episode's challenged your thinking, share it with somebody who needs to hear it, right? Maybe a parent, maybe a sibling. And if you disagree, right? I've already had some comments, like I said, on LinkedIn. So that's interesting. Drop us a comment. We love healthy debate. And again, we're not saying one size fits all. Please don't take it that way. But, understand that the hybrid approach is a much more cost-effective way to protect against long-term care needs that may or may not happen. So until next time, keep building wisely, stewarding faithfully, and prospering in the kingdom. And we'll see you next week on another episode. And don't forget, please, 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 give us a like, give us a subscribe. If you're listening to us on podcasts, whether it's iHeartRadio, Apple, or Spotify, give us a 5-star review and make sure you subscribe there as well. And we'll see you next week on another Prosper in the Kingdom. Bye, everybody.
Bye-bye.
Thanks for tuning in to Prosper in the Kingdom. If this episode added value to your day, be sure to like and subscribe. And don't forget to share it with someone who could use the encouragement. For more resources, head to prosperinthekingdom.com. Let's continue building lives of purpose and abundance, one step at a time.